Good morning, Zach. Nice to meet you.
Nice to meet you.
We've
been on before, but good to talk
Dale's
to you
out.
again,
Dale's dealing with Hurricane Hillary, so he is out right at this moment. I think he was worried about his power being out, and he lives in more central California these days with his wife. So they were kind of worried about what's happening over there. So I apologize for the short notice, but I'm with you today. So tell us a little bit about what you do.
So Garrett, Patton, and I run the Stock Wave service, as well as the Metals, Miners, and Agriculture service on ElliottWaveTrader.net. And then we have a duplicate of the Stock Wave service on Seeking Alpha. So we're part of Avi Gilbert's overall suite of Elliott Wave and other market services at ElliottWaveTrader.net. But Garrett and I really focus on individual stocks and looking for rotation opportunities between different sector ETFs. And then we, because we're looking at so many individual stocks and kind of looking at the interplay between those different sectors, it gives us a little bit of a different view by looking at all those parts of the whole. To what some of the other analysts might sometimes be seeing on the SPX or the other index charts.
Okay, awesome. Well, tell us a little bit about yourself and not specifically what you guys do, but tell us a little bit about your history.
So I was actually a history major at University of Maryland and got into the mortgage business, and in 2006 started to see that was maybe not the best place to be, and so started
great timing.
Started to look at other opportunities. I mean, 2003 to 2006 it was great, and then it started to get a little rocky, and I think I jumped ship before things got really bad there. And I decided that it would be a good idea to go into retirement planning and insurance. So I worked with MetLife for many years, and then as I was getting Series 7 and started working towards getting a CFP and things like that, I'm friends with Avi Gilbert now for going on 20 years, and he kept trying to get me to read this book, the Elliott Wave Principle by AJ Frost and Robert Prechter. And I kept telling him, no, I don't need to read it. MetLife has got this asset allocation questionnaire. It's like these 10 questions. We figure out what kind of mix of stocks and bonds the person's going to need to get them to retirement. And he's like, Zach, that was written by attorneys who just want plausible deniability when the market goes to pot. So he said, read this book. So finally I read it, and it just really made sense. Like the idea of how markets move based on human sentiment and emotions of fear and greed, and these repeatable patterns that have roots in Fibonacci just really clicked, and I could see the patterns, and it just really made sense. And I started studying it with him. And then a few years later, he launched his website. And very shortly thereafter, I started the Stock Wave service on it and left the windshield time behind of going to people's houses to take a look at their 401ks.
Interesting. All right. Well, I'm assuming you brought some charts and kind of where your focus is. Did you bring charts this morning? Or did you want to show your screen rather?
Of course.
Yeah.
Great. I can show my screen.
Great. All right. Well, I'm going to go ahead and pass it over to you, and let me know if you can grab the screen here, and I'll let you know if I see it. Perfect. I can see it. Yep.
Perfect.
So tell us what we're looking at.
This is the S&P.
Okay.
And I and Garrett are viewing the S&P, I think Avi really is too, for the most part, as being a corrective move up, even though it got so close to a prior high and could still even maybe get one more push higher. But viewing this very much like the end of 2019, where this was a large corrective move, even though it came up so high that people start screaming that it's the renewal of a bull market. But seeing, some potential downside looming, and maybe even this is the initiation part of that move. As I said, Garrett and I are always looking for those rotation opportunities. So we try to look for where the weakness is going to come from and where the strength is going to come from. So if we are in fact going to get more than just a corrective bounce as a small wave 2, inside the start of a bigger move to the downside, we want to know what are those things that are going to be driving that push to a higher high, at least a higher high over July, not necessarily a higher high over 2021 or January 2022, depending on the different instrument. And if we are going to only get a pretty weak corrective bounce or just a normal corrective bounce and then start to drop stronger, what are those early signs? What are where the weak link's going to come in, and talk about that. So I can talk about the S&P chart a little bit more, but I thought maybe you guys would like to jump in and kind of look at some of those sectors that we have our eyes on.
Yeah, sure thing. Why don't you show us what you got your eyes on?
All right. So first of all, probably the most bullish potential looking sector chart that we see at the moment that would be a big driver to potentially getting new highs is XBI. XBI has a really nice move well, it didn't make a lower low in October. It held a higher low in October, but then got deeper into March. But then since then has this really nice 1-2 setup, holding a corrective retrace to a higher low off of the March low. So that can be the finishing off the second half of a much bigger corrective flat structure off of 2022 lows. So particularly off of the low that we saw last week, there's really, really great risk reward in XBI. And for that to be one of the big market leaders on any potential push higher that we get. Certainly if it only gets a move up into the low 80s and then turns down to break that low, then that thesis is shot, and it could be, even though there's no clear pattern for this to have completed this larger degree B wave back here, you have a couple of lower highs since this high back in August. So this could turn and flip very, very bearish if it pivots under the 75 region at this point.
Can I ask you a question really quick with
of course,
as you go through your analysis, how much do you factor in, like, since you're looking at, sectors, how much do you factor in, fundamental analysis into your technical analysis? Do you do any, or is it just purely?
So a couple of years ago, actually right before COVID struck, we brought on Lynn Alden to consult with us in terms of fundamentals, and we really liked her approach. That was not kind of the standard look at certain balance sheets and the same metrics. She kind of has a very different angle that she comes at things from. And so we talk with her a lot, particularly when we have a couple guys that write articles for us, Levi and Jason. And so they consult with Lynn. And so they're making sure, and they're trying to find places of overlap of, what are the fundamental arguments for why we're seeing what we're seeing in the charts. I don't know off the top of my head what key holdings in XBI she's weighed in on recently that would be driving this, but it's all sentiment, and if you're looking at things kind of like reversion to mean and things like that, this is a sector that's kind of lagged behind. Because it's lagged behind in an Elliott Wave standpoint, it's given us this 1-2 setup of something bigger off of that March low.
Okay, that makes sense. All right, thank you.
Absolutely. Please feel free to stop me at any time. Another area that we see some good potential strength is in ITA. This is aerospace and defense. It's very much kind of doing its own thing at many different degrees. And so we're looking for a swing higher, really as long as it holds that June low of support, ideally holding the 113s here that it struck last week and launching pretty immediately higher. So that's another area. We're getting very excited about the energy sector, but not quite there yet. In about a year and a half ago, in May of 2022, we started to warn about a larger degree fourth wave consolidation. That since morphed into a larger triangle once it got a bigger B wave bounce than we wanted to see here, and then didn't follow through on a C wave to a lower low. So should be coming down one more time, but making yet another higher low. But that's going to be, I'm showing the XOP chart as opposed to XLE. They're very similar, but I think the XOP chart is much, much cleaner. So if we can see a nice corrective retrace back down towards the 120 region, that has some real nice potential to head into the 200s over the next, 12 to 18 months. I have it squeezed in a little bit sooner. A lot of things that we look at on our charts are not necessarily for timing. We're trying to show the structure. And a lot of times I'm going to squeeze in the later part of the move, where, specifically not showing it for timing. I don't think this is going to finish by January 2025. It could, but that's not what I'm going for. I'm just going for highlighting the structure, but want to show as much of that detail for context as I can.
So Zach, you're showing a lot of setups for a bullish outcome in these indexes that you're looking at. But what are you seeing anything that actually could suggest that we are more or less topping in the S&P and we might see a move back down below 4,000?
So those are the few areas of strength, and whether those are defensive plays or whether they run counter to the market, I'm not sure, or if it's just that those are things that drive a little bit more extension before the market turns really sour.
Sure.
But retail is another area that we are very, very concerned about. Retail did not make any even attempts at making higher highs over February. It made a lower low in October like the rest of the market, but that really looks like the lower part of a expanded correction. We call that an expanded flat, where the B wave, or in this case an X wave, makes a lower low or a higher high, which implies that there's a lot more pull to the downside because it brought this to a lower low, even though it was part of inside of this bigger degree correction. And then since then, it has 5 waves down and 3 waves up into a Fibonacci retrace level, and could be one of the really more aggressive sectors that heads down.
Oh, got it. Okay. All right.
So that's one of the ones that we're most concerned about. I think XLF shares some similarity there, but it's kind of on the fence right at the moment, where it can count as the same possible 5 waves down and 3 waves up as this wave 1 and wave 2 in the start of the C wave already. But right now it's holding the potential in the 3350 region here to try for one more high in just this wider flat that we've seen most of the rest of things in the market get. This is not a high probability long setup to play for one more high into the mid 36 to 37 region. As a scout play, if you are more nimble, then with support at that 3360s, it's good risk reward for that one more move. But I would just be looking at this more as a ability to reposition and retarget the downside for this to, the whole pattern to reset.
Yeah, it's hard for, in today's environment, especially with rates where they're at, it's you look at the financial sector and it's like, man, I don't know if I could be long,
Right.
So, right.
So those are kind of some of the more risky spots. And then also, I'm going to go to the SOX chart instead of SMH, because SOX didn't split and SMH did. So it makes it hard to look at that on a shorter time frame. So semiconductors is another area. There's a few of the semis, and once a month, actually once a week, Garrett and I do a webinar, and we focus on, for the first 20 minutes or so of that webinar, we pick a particular sector or subsector and look at the sector ETF chart or index, and then we drill down and look at some of those key components and see which charts argue more in favor of the pattern that we're seeing, and which ones are kind of outliers, and what are the key drivers of that pattern structure. So very much like what we're seeing in the NASDAQ and the S&P, it looks like we could easily have a top in place to this larger B wave and be looking for a measured move or a measured move plus from the same move that we saw down for most of 2022 play out to the downside over the coming 12 to 18 to 24 months for a move to the downside. And this can easily be just the beginning of that move. We could even count a small 5 waves down, maybe it gets another little 4 or 5, and then it gets the bounces the wave 2. but
Yeah.
easily just the wave one start to this wave one of a bigger move to the downside. Now, I don't think this is really set up as like a crash scenario. Although, this could be just as much, a bigger move to the downside than most people saw in 2020 post COVID, but it doesn't necessarily have to be as quick and violent as that. It could easily stretch out much longer and be a pretty controlled slog to the downside, but really wears some people out and gets things really nice and oversold, so we can get at least a big corrective bounce off of that low over the next 24 months or so.
All right. Well, that would be interesting. I mean, the semiconductor index is obviously a big driver in technology. So, well, that's awesome. Any other big charts that you're really focused on right now that's like, this is where I'm going to keep my attention really over the next couple of months as we head into the tail end of 2023?
So in addition to some of the bullish sectors, in terms of like that we talked about, XBI and energy and ITA, maybe also XLV, we like the shift to possibly back to a kind of inverse correlation where metals and miners are seen as a safety play, could start to, as a risk off trade, could start to fill out again. This is a ratio chart of the S&P to gold ratio. And we see this possibly getting one more push up into the 238 to 240s to fill out the final push higher in this B wave, but it's not really needed. And seeing that ratio start to fall, which doesn't necessarily imply a specific direction for either gold or for the S&P, just that relative to each other, that gold would be gaining in value. But when we do look at the metals charts, and not just gold and silver, but also copper and platinum and palladium, they all have really good looking structure. I'm actually going to go to the back adjusted because there was a pretty decent sized contract roll that I think skews the look of the regular futures, the continuous futures chart. So I have a few, just really one alt on here. The yellow is just, we got forced into this wider expanded flat, but as we talked about with the XRT chart, when the B wave of that larger degree correction made the lower low, here you have the B wave that made a higher high, showing that the upside pull underlying in the metals, particularly gold here, is much stronger. The alternative is just that was an extension of a larger wave one, and so we could get a little bit more of a retrace in the larger wave two, as A, B, and a little bit more of a C wave to come down into some of these fib support regions. But that's really not needed. If we start to get over the 1960s, then we probably do have a bottom in place and can start that third wave up in the metals.
Do you think that third wave will take us to all-time highs then?
I do. If we zoom out here, again, I switched to the back adjusted that doesn't have all of the prior data, prior wave counts on there because of that contract roll that we had. Was it back here? Yeah, this here, like that, it popped almost 40 points on the roll. Really kind of, it skews the smaller degrees when you look at it there, because on the regular continuous that's not back adjusted, we actually haven't made a lower low yet from June. So I switched over to this chart. But yeah, I do think that we can head up towards the 2,500 region.
Awesome. Well, I think a lot of the gold bugs would love to see that. So, and the wave counts that I've seen from people that follow your type of analysis, see one more low below the 1880s, down towards 1850 before rallying into new highs. It's gold's, I think universally what I'm hearing is most people are looking for a bullish move out of gold, after this corrective move right now that we're seeing.
Right. Well,
interesting.
I'm definitely not going to fight. I'm definitely not going to fight a move down to the 1880s or 1840s, but I don't know if it's needed. So I'm going to be looking closely at the small degree wave structure, off of the low here, and see if we do in fact get a small degree 5 waves up and 3 waves back to form a bullish small degree 1-2, and then keep tracking that and see where it goes, as long as it's going to hold support.
Right, right. Well, Zach, I apologize that Dale wasn't able to be here today. You know, the once in a century hurricane that hit the west coast of the United States obviously had an effect on Dale. But I want to thank you for being here with us today, and I hope you join us again here on the Face Show. And I'm sure Dale will be reaching back out to you. But I want to ask you real quick, what's the best way for traders to follow your work at what you do at Stockwaves?
So go to elliottwavetrader.net and sign up for Stockwaves there. We post some stuff on, we post articles on Seeking Alpha, free articles on Seeking Alpha. At least I guess they're free for the first week or so, and then Seeking Alpha sticks them behind their paywall, which kind of seems a little bit counterintuitive to me, but anyway. And then also on Twitter at ZACMANNES. So I try and post a couple things a day on Twitter. And it's not just like teasing the analysis that we're doing in actual Stockwaves. You know, I try and share some real stuff there too. And also just try to have a little more fun.
Awesome. Well, you know, hey, Zach, I'm gonna I'll reach out to you separately. I'll bring you in on Trader Summit one of these days, and we'll do a little bit more in-depth analysis with you if you're up for it.
Absolutely. Thanks, Blake.
All right, Zach. Well, thank you so much for joining us today, and folks, I want to say thank you so much for spending your time here with us on the Face Show. And Zach, have a great day, great week, and enjoy the remainder of your August month. And everybody else, we'll see you tomorrow morning on the Face Show, bright and early.
Great. Have a great day.
All right, you do the same. Thanks, everybody, and have a great one. And we will see you tomorrow on the Face Show. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.